Good day everyone, this is Patrick from EasyFX Code Training System, and this is Thursday the 15th of August 2019, and it's just about 2 p.m. in Singapore, and right in the afternoon Asian trading session. And we'll take a look at the spot gold and dollar yen for this review. And just following up on Tuesday's review when I was highlighting that that 1533 was a possible target next, and it did hit it without much of a retracement on the Tuesday after the review, and it spiked through to hit a high of 1535.04. And if we switch to the 4-hour chart, you can see that already this daily chart is a bit scary with a swing of around 550 pips or so and a whipsaw for the day, but let's see what's been happening. And after setting that high in the afternoon, switch to the 1-hour chart, look at it even further. It was drifting lower to retest the Asian trading session high, and that was at by 8 to 9 p.m. But right after that, that was also with better than expected US CPI figures as well, so which drove the spot gold lower already. But right after that, at the US stock market open at 9:30, there was news that the US would delay tariffs, 10% tariffs on China goods until mid-December, and this turned into a risk on situation. So this dropped gold all the way back down to the weekly pivot, and as well as the 1-hour 200 EMA. This was a fall of almost 400 pips, and because of this relief in the trade tension, so the market took it as a sign of risk on and sold off the safe haven pairs like spot gold. So after falling, it did rebounds back up to the 138 Fibonacci level at 1503 and consolidated for the rest of the day. And yesterday it continued to recover somewhat and climb back up to the 1520 range, and where it's now trading in this range today from 1520 and down to as low as the 1515 area. So 1515 to 1525, that's the range for the day so far. So that's what caused the whipsaw, both positive CPI news for the US and the relief in trade tensions. However, it's not guaranteed that the trade war is over, as they still need to come back to the table in 2 weeks, so nothing has been negotiated yet. So that's why there was this retracement and recovery back up higher. Right, it's back to the 4-hour chart. So however, the support at this 138 Fibonacci level, I think is still valid, and so is this resistance at the 200 Fibonacci level of the bigger move at 1533. So that's the range, 300 pip range that it could be consolidating in. However, there's also an intermediate resistance at the weekly R1 1526 area. So you can see that it's momentum is slowing down and it's not trying to breach that level yet, not yet. All right, so switching back to the daily chart. So for the rest of the week, well, there is still one more set of US news tonight. That's the Philly Fed index and the retail sales figures. So that's the only US related news left for this week. So we'll see what the impact is on spot gold and the dollar yen. So let's switch over to dollar yen, which is inversely correlated to spot gold, because the safe haven is the Japanese yen, and this is a dollar yen cross. So if they're bidding on the Japanese yen, the dollar will be weakening. And now in this case, if this is a risk on trade, they are selling off the Japanese yen. So they're bidding on the US dollar, and this drove the US dollar higher back up to the swing low at the 100% fib area. So it managed to find that support just above the 105. That was at the start of the week, and it recovered massively with this move of 180 plus pips on Tuesday. That was also the same relief on the trade tensions, and that was that big move up. Switching over to the 1 hour chart, you can see that was the massive rally up there. After that, it consolidated, and yesterday it drifted lower again. Drifted lower back down to the 138 Fibonacci level. Right, from the 100 back down to 138. Okay, back to the 4 hour chart. So now there's interim support at that level, 105.80 area. And with this resistance is still at this 100 fib level, and just near the weekly R1 at 106.71. So this could be the consolidation range, also about 90 pips. And we'll see how this reacts with US news tonight as well. So on the daily chart, you can see that retracement of that move of Tuesday back down to the 138 fib, and we'll see whether there's any possible bounce and consolidation in this area. Okay, so that's it for this week's analysis, and unfortunately there's no trade ideas because a lot of the moves were done on Monday and for the first 3 days already. So we'll follow up on the weekly analysis on Sunday then. Okay, have a good trading week and cheers.